Hello guys, welcome back to Study FX channel. It's on this channel, it's about forex trading, binary trading, and crypto trading. If you're new here, welcome, and if you're a returning subscriber, thank you for always coming back to watch my videos. So guys, on today's video, I'm going to be teaching you what is a forex market structure. So the forex market structure refers to how the foreign exchange market is organized. It includes who participates in it, how trading happens, and the different types of market. So understanding these structures help traders make better decisions. The next thing that we need to do here is to know who are involved in the market structure. So the first people or the first traders who are involved are the central banks. These are the big banks of countries that control their money supply and can influence a currency value. So the next one is commercial banks, large banks that trade currencies for their clients and themselves. They help improve liquidity. That is the ability to sell easily in the market. So the next one that we have here is institutional investors. So organizations like hedge funds and pension funds trade large amounts of money and can impact prices. The next one that we have here is the retail traders, who are as generally everyday people who trade currency through online brokers, usually in small amounts. So the next thing that we have to know is the types of market in the forex. So the first one that we have here is the spot market. This is where the currencies are bought and sold for immediate delivery. For example, if you buy euros today, you get them today. The next type of market we have is the forward market. Here you can agree to buy or sell currency at a set price for a future date. This helps manage risk. Another type of market we have here is futures market. Similar to the forward market, but these contracts are standardized and traded on exchanges. Next thing that we need to know here on forex market structure is the marketing hours. The forex market is open 24 hours a day, 5 days a week. So it has different sessions. The first session that we have Sydney session, we have Tokyo session, we have London session, and also we have New York. So we have an example of interbank markets here. So big banks like JP Morgan and other banks, they trade currencies with each other. For instance, if the USD pair is changing a lot, they might trade large amounts to trade their investments. So the next one we have retail trading. A person uses an online broker to buy euros in USD dollars at a rate of 1.1500. They believe the euro will go up in value and they plan to sell it at a higher price, that is the retail. And also for spot market, a US company needs to pay a supplier in Japan. They convert $1 million into Japanese yen at the current spot rate, and the exchange happens within 2 days. So knowing all the forex market structures, it helps the traders to understand how the market works and also what affects the currency prices. So understanding this allows someone to make a better trading decision and also to know the risk it involves and also to know where your trading strategy works. So that's it for today, guys. I hope you're enjoying and I hope you're learning. See you in my next video. Bye. So that